especially ASEAN, we are lag behind except for Singapore. So now we lag behind mainly because of our COVID case is very high, vaccination progress is not there. But Malaysia is catching up very fast, so Malaysia will be the next one after Singapore that may look quite attractive in the eyes of the foreigners once our vaccination progress is actually hit a certain rate. Yeah. So we are actually delayed. All our reopening play that we are expecting for has been delayed to next year, or maybe fourth quarter to next year. So we have a hope because we haven't really recovered much. We are one of the worst performing market in the region.
Yeah. I mean, they have been saying that, we have been hoping, although it's not a very sharp, acute angle of V recovery, but now it seems like more still stuck in the so-called K recovery. And for those at the lower end of the K, if it is with COVID, any chance that they were forever stuck there? And what does that mean to the investment strategy?
Okay, I think the B40, the poorer community is really stuck and everything will have to be reset after this. It's quite difficult to normalize back to COVID-19. But in the investing community, as I said, there are certain sectors that are doing well during this period. We have to be very selective. Otherwise, a lot of the SME, a lot of the industry may have to reset a new starting era again, rather than expecting it to actually return back to the pre-COVID level. Okay. We've got to be realistic going forward. We continue to look for opportunities. Yeah. Unfortunately, the poor people may need help for some time actually.
Okay. Now, Ms. Joy, at the beginning of the year, when most of the market is talking about recovery, of course, Yvonne said that we probably were still stuck in the with COVID situation, and of course, even now, US and even Europe has started so-called to a sense of tapering. But on the other hand, this morning, I think most of the participants also heard from David that, commodities may still in a little bit of upcycle. So what does that mean to the interest rate environment, and how does it affect the fixed income investment?
Hi, good afternoon. So in terms of inflation, I guess the question for us is whether is the inflation uptick that we have seen earlier part of this year, is it transitory, as most of the central banks have been telling us, or is this going to persist over the longer term? Right. So right now it looks like the uptick inflation is currently driven by supply side constraints, and is expected to subside as the bottlenecks ease. But as you know, there's still a lot of continued waves of infection, causing start and stop in terms of operations, and that might still carry on for quite a while. So all this is affecting in terms of how fast the recoveries in the economies can be seen. And because of that, I think central banks will have to be quite careful in terms of unwinding the support. And before that, and only after they've unwind all the extraordinary stimulus support that they have given last year, especially, then only can we look towards a lift off in interest rates. So in my opinion, it won't be so soon before we see any interest rate hikes. Definitely, it looks like things are still quite a fair bit uncertain as of this point in time.
So for a while, the bond investor or the bond fund investor, of course, fund managers will know how to position themselves to a certain extent. Can I say that the bond investor can just sleep peacefully at night?
Well, it's my wish that we can all sleep peacefully at night.
No. They will leave the fund managers to sleep peacefully. They will sleep peacefully and let the fund manager wake up at night to watch CNN or whatsoever?
For now, I think global central banks are going to remain accommodative, and this current interest rate outlook is still conducive for fixed income. For example, for fixed income, it's still quite conducive, and we can continue on for now until the next surprise happens lah.
Okay. Okay, Kok Heng, our government, right? Our government now has started to actually open, in a sense that open up economy activities, right? People can travel to Phuket for holidays, and then also the foreigners, especially business related, are allowed to come in, to resume some of the MNC activities and all this. So what does that mean to Malaysia economy? How soon do you think that Malaysia, stock market has reacted quite fast. I don't know whether it's reacting to the so-called expectation of the economy, opening of the economy, or is it due to the so-called more settle down on the politics side? But in either way, how soon do you think that our Malaysia economy is likely to be back into its normal track? Because Bank Negara seems still quite cautious on the interest rate. Cautious in the sense that they neither reduce it or, which definitely I think unlikely they will raise it, but they are still quite cautious and maintaining the view of to be business friendly. So how soon you think our Malaysia economy will really back on track? I don't know whether your mic is mute or not. Kok Heng, are you with us?
I just in again. Just now got some problem. What is your question?
Okay, in short is with vaccination rate continue to pick up, political uncertainty also looks like to settle down, and government is start to reopening back the economic activities like traveling to Phuket, and then foreigners, especially business related, now can enter Malaysia much easier. So how soon you think our economy will be back to normal? Because stock market has already rebounded, and if our economy can be back to normal within a short period, do you foresee that there will be more upside onto our equity market as well?
What you say is correct, that the stock market has rebounded because the foreign fund has started to come in again after the new PM was appointed. But this infected rate is still very high, right? Despite the fact that we have so many people get vaccinated. The number of percentage of people vaccinated has been rising rapidly, but at the same time, you can see that the number of people infected is still not coming down. Right? So something is not right. In other words, there are a lot of people get infected by this COVID, but they are not tested. So World Health Organization's recommendation is that a good number should be 5% infectivity. But Malaysia, you have gone above 10%, and it's still not coming down. Right? So that portion is worrying, but at the same time, the government do not want the economy to continue to be locked down like this. So they have taking the risk to open up with the comfort that those people affected, they are not seriously ill, but the ICU percentage utilization is still pretty high. Right? Some still above 100%. It's still not coming down yet. But I think we have to live with it that perhaps we have to accept that COVID is a part of our society going forward. Just that we are forced to open up a bit earlier than what we should be.
Okay, there are actually a few questions from the participants, related to our market. I will come back to you later. Before that, okay, Encik Salim,
Yes.
Actually, there is also a question from the participant as well. Is that now with this type of situation, as our fellow panelists has said, things are still. I mean, of course, everybody hope for the good side, because we have we have practically, a lot of us has been under so-called house arrest for quite a long time already. But even like Joy has said, interest rate, at this moment is low, but she can't rule out the possibility of a higher interest rate into the future. And then similarly, market, as Kok Heng, even Yvonne also has mentioned, there's still some uncertainty. So with this type of environment, what are the Bursa derivative products that can help investors to leverage on this type of uncertain environment?
I think that's overall a very good question. If we look at the overall scenario, Bursa having the crude palm oil contract as the global benchmark for the palm oil market players. Are we in a commodity super cycle? This would happen when long-term price trends is largely due to disruption from supply demand, especially with COVID pandemic and the recent economic incidents that we've had. So having contracts like soybean, copper, and also crude palm oil, the FCPO has been quite actively used by a lot of the edible oil and fats industry players. Having said that, over the past year, we have seen a significant rise in the prices of crude palm oil, from prices around the Ringgit Malaysia 3,200 per metric ton at the start of 2021. Our third month benchmark FCPO contract has witnessed a few historical highs this year, and even reached the highest in mid-August with a price of Ringgit Malaysia 4,560 per metric ton. As a contract that can be used for risk management, futures contract like the FCPO actually provide market participants with an effective avenue for hedging or even managing risk against these kinds of price volatility. To further add to that, I think just looking at Malaysia itself and palm oil itself, West Malaysia used to produce 78% of the overall CPO. Fast forward to 2020, East Malaysia now produces 45% of the overall CPO. And in trying to benefit palm oil players with a better tool, we, Bursa Malaysia Derivative, will be actually launching a new East Malaysia crude palm oil contract, which we are calling FEPO, and that is expected to be launched next month in October 2021. And this will basically provide a new avenue of price discovery for players who have exposure to the East Malaysia palm oil contract.
Okay, thank you very much. There are some further questions which I will keep it a little bit later. Now I will go to Joy first, because this not only affecting fixed income, but definitely also affecting the equity market. So investor or our participant has a question of with US and also the Europe tapering, right? The tapering seems to be quite imminent, and we all know that, or rather to say, we can't deny that the current market momentum, to a certain extent, is driven by liquidity. So, with all these start to coming to an end, will it lead to a market clash? And because it is quite an unprecedented situation that everybody has done QE, but we have not experienced the really, ending of the QE. Japan in the past, yes, they did once, which actually end up to a quite catastrophic situation. So with, let's say, assuming that if QE, or rather to say, is really back to normalization, first is, what does that mean to the fixed income market? And of course, later I will come back to Yvonne and Mr. Ang or Kok Heng on what does that mean to equity market. So Joy, what do you think? I mean, were we heading for, I mean, nobody wants it, but I know some people also waiting if there is a crisis that is, I mean, nobody need to ask any question. They know that's the best time to buy. So first is, were that, what is the likelihood that, the ending of this QE, right? That means the drying up of the liquidity lead to a catastrophe. If yes, when do you think that it will happen? Of course, this is highly speculation. Nobody knows, but it's just, let's say if it really happens, when do you think, or you may think that it will never happen? So, okay, Joy.
Okay, thanks. Well, I guess in the past couple of months, we've heard about the tapering, like you mentioned. People, I think, are wondering when will the Fed start to taper, when will ECB start to taper, right? So based on what we can see, even from ECB, a couple of days back, ECB president also mentioned that they are slowly reducing their bond purchases in the coming months. But she emphasized that it's not tapering. Fed also, for Fed chairman also mentioned that they are encouraged by the positive developments in the US labor market, but they still want to see a bit more substantial further progress before they start to taper as well. So what it's telling me is that whatever tapering will happen is going to be really slow, because right now, I think as I mentioned, we're still seeing a lot of uncertainties, right? As you mentioned, there's the new variants now, other than the Delta variant, there's the Lambda and the Mu variants, and so much uncertainty right now. Can the central banks really fully pull back all the stimulus that they have been throwing into the market, especially since last year? Right? Can you withdraw all the stimulus in a very quick manner without upsetting the balance right now? So personally, I don't think it can be done in a very quick manner. It will have to be withdrawn very, very slowly, because what happened last year was basically like it was a flat tire, and how you pump a flat tire, fully try to reflate it by putting in a lot of air. So that's what they've done. But for now, to remove it, it will take some time. And as we have seen in the past, it's not as easy to remove stimulus as it is to pump it into the economy lah. So I don't really think that they can go very fast, and if they continue to be gradual, that should not cause the catastrophe that we hope won't happen lah.
Okay, good. So I mean, investor can just sleep peacefully and let the fund manager be more alert and work for the money that they invested.
Yes.
Okay, now with this so-called tapering in mind, of course, Joy has put her view up. Yvonne, last round of a tapering last round with the QE, we see an influx of the money into our emerging markets and to this part of the world. And when the taper begins, actually our market suffers some volatility. Now this round, as Joy has pointed out, the tapering will be probably in a very slow pace. So in this context, and looking at the so-called unsynchronized recovery, that means that Europe, US probably is more on track, and for this part of the world, except China, essentially because of our low vaccination rate until recently, that has caused some even supply chain disruption and all this. Now, with things start to come back, first is that will the supply chain disruption continue? Second, will foreign funds start to look back into Asia and Malaysia? Because I think throughout this morning, there have been questions and practically, I think there's no denial as well. I mean, developed market valuation is definitely higher than most of the markets here. So in that context, now we are ready, right? We are into the corner, and hopefully we can come out in the corner smoothly and go into a smooth, straight road. So in that context, do you think that foreign funds will start looking into Asia and also Malaysia market as well? Yvonne?
Yeah, okay. When we talk about recovery, because China is first got into trouble and first come out, okay? So then followed by US. So that's why this year is really developed market and US is doing very well because it's starting from a low base and the vaccination progress is much better than the emerging market. So that's why developed market is actually doing well. It doesn't mean that next year developed market won't do well. I'm just talking about maybe because of the higher base this year, next year, actually some of the signal is actually showing some slightly slowdown in terms of growth. Okay, so they'll be quite challenged. But when you talk about liquidity, it's still strong. But because I agree with Joyce, tapering is going to be very, very slow. There's still plenty of liquidity in the system, and they are going after what asset class. So it's a competing asset class between fixed income and equity. And if you really have to choose, in that kind of environment, it is still favor on the equity side. Unfortunately, because of there's still growth. Okay, there's still growth between developed market and emerging market. Why emerging market actually lag behind so much, especially for ASEAN, is because of our high COVID case and because of this vaccination is very slow. The rollout is so slow, so it actually in favor of developed market. That's why developed market do well and we lag behind. Okay, now since we lag behind, it's only for us to do better, right? But in the Asia scenario, if you look at the Asia fund, okay, emerging market, because it's not consistent, there are certain places is doing well, like Brazil and all that, but there are certain places that's already coming off and start slowing down, like China. So China is a big chunk of the Asia index. So if you're talking about Asia Pacific index, probably is actually ex-Japan is in China. So if China is slowing down, it's quite difficult for Asia. But foreign investors started to look at, so what is the laggard play? So between the northern side and the Southeast Asia, looks like ASEAN ex-Singapore. Singapore has a good rally already, lag behind because of low vaccination. And as I said in my session, Malaysia is second after Singapore. We are going to come out of this. We may not come out with very low cases. Unfortunately, we are going to live with COVID, but our vaccination rate will be higher than our ASEAN counterpart or the other peers, except for Singapore. So we'll be catching up on that front. So this part, and also because we have the lowest foreign holding, almost as low as 1 decade ago. Okay, foreigner already underweight a lot, significantly underweight in Malaysia. So there is not, I don't see much downside from here. The downside from here may be, it's just because we have a very strong rally last month. We may have some profit taking. After the profit taking, things settle. If our political landscape do not have major changes that shock the system, and people see as some sort of stability, I think the foreign money coming in with some growth going into next year, because growth didn't come in this year, or the reopening play postponed to next year, then we are actually looking at a positive return for Malaysian market going forward.
Okay.
Did I answer your question? I think I sort of answered your question. I think we are laggard. ASEAN is laggard.
These are the questions by the participants.
Yeah. Okay.
Right? If anything, they will have a follow-up question for you.
Right.
Okay, Kok Heng. As far as Malaysia is concerned, last year, I mean, these are also questions from the participant. Last year, I mean, to a certain extent that irrelevant of the market, actually a lot of Malaysian funds has been performing very well. I mean, essentially thanks to the glove stocks, right? Now, with most of the panelists agree that at this moment we are still in the with COVID situation. So in that context, what are the sector at this moment that fund managers are avoiding? I mean, is it like, let's say, rubber gloves companies that fund managers are avoiding? Or, I mean, those that, don't really benefit if we are still in the with Corona situation?
I think everybody agree that it is a recovery play, right? Those stocks that went down because of the lockdown, because of the restriction in terms of business and the production. So when the economy started to open up, then the business will be back to normal, and some of them can even benefited after they reopen the business, because some of the weaker player may be out of business, so the stronger one may stay and could enjoy a bigger market shares. So that recovery sector, you vary from the sector to sector, so it's very broad thing, right? And tech sector, although the growth is still there, valuation is still very high, so you have to be very selective. So some of them, I think they are doing their own design, own R&D, have their own internal strength, so they can generate business rather than contract manufacturing. Contract manufacturing will be the more of depending on the principle, which could be a lot of them could be related to Apple. So I think investment had to be very selective going forward.
Okay, I'll come back to you on the tech sector, because there's a question from the investor. But first, Encik Salim, there is a question from the participants on how can Bursa to promote more trading activities for the trader, because it's saying that if the trading volume, in the derivatives is not big enough, then Bursa may lose some of these traders, that they will go into a much bigger market elsewhere.
Okay, I mean, referencing that question, I mean, Bursa has several initiatives that we take on to try and encourage more trading into our marketplace. For our bigger two contracts like the FCPO and the FKLI, there is enough traction, there is enough volume that warrants trading. Looking at the smaller contracts or the other contracts, we constantly have education sessions via ventures with our trading participants to further educate the marketplace on the available products that we have. As one of the initiatives, we have come up with trading competitions. When we relaunched the FM70 contract, we had a trading competition for investors to encourage trading into the revised contract. As well as, we are constantly working with the marketplace and some market makers to be able to, put up quotes in some of the newer contract or lesser traded contracts. So these are some of the initiatives that as the exchange, we try to grow the trading volume and try to keep the investors or participants interested in our contracts. At the same time as well, I think we also are looking at ecosystem infrastructure, putting in place. Like currently, we do not have a night trading session. We only have a day trading session. Come end of early December, we will be looking to add a what we call a T+1 trading session. So this will then give another window of opportunity for the market players to trade when the US market comes into play, when it opens up. So you have, with the US opening up, with US data being released around the early morning part of the US market, having a trading window would then also encourage or give opportunities for investors to, be able to trade the marketplace.
Okay, good. I'll back to Kok Heng now, because just now there is a participant asking about, which is actually quite a big question. So, but I will start off with Kok Heng, then after that go to Yvonne and Joy. First is that because of the trade war, right? Because of the US-China trade war, so very likely China will start to develop its own semiconductor ecosystem, which I think this morning one of the speakers also has mentioned on that. So if that being the case, how much impact it will have on our Malaysia local industry, right? I mean, of course, the technology industry and probably including some other manufacturing as well. Kok Heng?
US-China trade war, especially on the tech sector, has benefited Malaysia to a certain extent, because some of them have started to move out of China, and we do receive some of this outflow. Even China itself also, because of the restriction for export into US, they also diversifying their manufacturing base out of China, also going to particularly like Vietnam, but to a certain extent to Malaysia. China development of this semiconductor ecosystem is definitely there, but with the US-China trade war, it only make China to speed up the development of their tech capability. So eventually, China will be much stronger in this sector, because they're going to put in a lot of resources to be self-reliant and to be independent from US. So in the process of expansion in this sector, some of Malaysian company is already actively looking for the spillover effect, collaboration with the China company, and provide the services in China by setting up the business in China also, right? Those in the industry will know that there are regularly announcements by the Malaysian company securing contract in China because of their recent expansion in this semiconductor.
Okay, like I said, this is a very big questions from participants. Actually, I mean, from a number of participants, it's just been consolidated into one China-related questions. I mean, this year, the Huarong, which actually was mentioned also earlier by other speaker, but Huarong, and then we have the Evergrande situation. Looking forward, Joy, do you expect this type of similar system, whether you call it systematic risk or not, this type of risk continue to happen? And what is the implication to the fixed income market in Asia and also to Malaysia as well, especially on the corporate bond side?
Okay. So like you mentioned, those issuers that maybe would deem to be maybe too big to fail. There's some repricing recently that reflects the realization that maybe these bond issuers might not necessarily receive the bailout assistance that they had been expecting should they encounter financial difficulties. But although if we follow the recent news, it suggests that there is some kind of support as the government realized that is could be some contagion risk. So in terms of that, we haven't seen any spillover effects to the local bond market, for example. But that said, I think where investors reconsider or reassess credit risk on, say, corporate bonds in China, this might benefit regional bond markets in terms of foreign flows. So, for example, we can see monthly foreign flows into regional bond markets continues to be positive. In fact, for Malaysia, over the past 8 months for this year, we've seen net inflows into the local bond market exceeding 27 billion. So this is quite substantial. If you compare to last year's total net inflows was about 18 billion. And before that in 2019 was 20 billion. So this year 27 billion is quite substantial. And majority of that goes into our MGS and GII market lah. So that has helped to support the bond prices despite all the fluctuations that we have seen in the first quarter, especially this year.
Okay. Yvonne, of course, I mean, China, as you mentioned just now, China is the one that to go into the COVID and then the first one to come out. But I mean, which everybody knows, China now is technically, I would like to use the word so-called a little bit of structural reform in a sense on the common prosperity and then tackling some of the wealth inequality and so on. So in this context, what are the sectors, in Asia? I mean, because China also will have influence on Asia as a whole, including Malaysia. So with China now doing some structural reform, so what are the sectors that are actually likely to benefit from this China structural reform? I mean, whether this sector is in China or even in Asia, including Malaysia.
The China structural reform and also the policy uncertainty may actually impact some of the asset allocation by the foreigner in the Asia fund, Asia fund and all that. That's why I said maybe there may be some interest coming back to ASEAN again. But looking at the businesses wise, like China strategy, they are going for the clean energy. They are actually very strict on certain polluted industries and all that. That may actually benefit some of our company, okay? Like for example, aluminium. And but not so much on a lot of other things. Like the common prosperity, all this thing is a very long run thing, but in the longer run, actually more people can raise their overall household income. Is actually a very good consumption story. If it turned out to be good, consumption story is there. But of course, in the shorter term, some of this policy uncertainty is actually very negative to the sentiment, especially on some of the tech company that the foreigner have a lot of holding because of they don't like policy uncertainties. Yeah, and also some of the like education stocks and all that used to be darling stocks and used to trade at quite high valuation. We start seeing some correction because of policy risk. But that doesn't really impact Malaysia. As I say, the one that maybe Malaysia actually benefited from the US-China trade. In fact, China going into clean energy may also help some of our product. Otherwise, there's not so much. But there's a lot of investment coming in that we are hopeful, and also our investment there, that business opportunities and all that will continue. But I really hope, besides US have a huge consumption story, if China manage to actually raise the overall per capita income of the household, the consumption story is going to be very, very strong in the longer run.
Okay, so essentially,
the asset allocation changes may have some impact on the overall emerging market. As I already mentioned, China is a big chunk of the emerging market index and also the Asian ex-Japan index. Yeah.
Okay, so essentially, I mean, this restructuring and so on actually is also in line with the China DCS, right? The dual circulation strategy, which of course everybody expect that not only China, because the external circulation may also benefit. I mean, both external and internal circulation will benefit some of the exporter in the ASEAN country as well, right?
Yes, yes, yeah.
Okay, good. Okay, now we leave China aside a little bit. There's participants. I mean, essentially, probably it's also still, I think, maybe a conservative investor, a little bit worried on the so-called bond side. So the question is, will there be another debt ceiling issue in US? And if that happened, what is the implication, right? I mean, again, it goes back to just now, you know, how will it impact the bond yield, and of course, ultimately impact the probably the bond fund that he has invested in, right? Although I always say let the fund manager worry about that, but probably fund manager also have to make sure that the investor understand that they don't have to worry. So Yvonne, Joy, what is your take on that, on the US debt ceiling? Will that be an issue again and causing another volatility in the fixed income space?
Okay. I guess if you compare maybe this year compared to the past 4 years when maybe Donald Trump was the president, I guess my take is that Biden's probably not as confrontational, and we're not going to likely see those kind of fiscal cliff appearing like what happened in the past couple of years lah. So there is still time for them to resolve the US debt ceiling. I think it's only next month before the Treasury starts to run out of funds. So there's still time to discuss and negotiate and work things out. So for now, I think maybe the focus should really be on how is the US economy gonna perform, right? Because the labor market has actually recovered quite substantially compared to, I think, the immediately after the pandemic, there was about, I think, 23 million people out of job. And as of latest number is only about 8.6 million people out of job. So compared to pre-pandemic, it was only 6 million. So we are getting there to the stage where, you know, it's looking kind of good, but there's still concerns like we've highlighted on resurgence in cases and maybe some more lockdowns and so much uncertainty. So I guess, yeah, don't worry too much. I mean, we can't really control the future, right? We will do our best as fund managers to look after your investments, make sure that we put it in the right place, we safeguard it for you. So we can't, we shouldn't lose too much sleep on it lah, I feel.
Okay. Well, investor always worry. So there is another question that investor is worried about is, I mean, of late, there are some talk in the so-called media and all this about possible stagflation. So first is that, Yvonne, do you think that stagflation is likely to happen?
Not our house view lah for now. Yeah.
Okay.
Yeah, because we are talking about whether inflation is transitory or not, you know. And in fact, in Asia, we hardly see much of inflation. In Malaysia, inflation is nothing. I mean, 2-3%. It's very low. Stagflation is, I don't think we see that. Yeah, it's a concern that every now and then people will just have this idea of stagflation. I still see the current situation is still very pro-growth. Yeah, we are still looking at the growth right now. Yeah.
Okay. Okay, back to Malaysia market. The question is, government continue to stimulate economy, so-called pump priming in a sense, and what can we expect from the budget, the coming budget, 2022 budget? Kok Heng.
Yeah, the coming budget definitely is a difficult one, especially the finance minister himself also is new, right, as a banker. I think he also mentioned it aptly that is at this point in time, we may not be able to implement the GST to broaden the revenue, even though the government need a lot of money. The issue is where to get the money, and the government also do not intend to increase the corporate tax, since our corporate tax here is already quite high. Going forward, we should be reducing our corporate tax and have other sources of income like GST, right? But since election is coming probably next year, so it's not a timing for them to have this GST for time being. But at the same time, where can they get revenue? The previous finance minister has asking people to declare those income not declared overseas. That is already one source of income for them, coming to, I think, close to 10 billion. So trying to get those people who are supposed to pay tax not paid is a job of Indian revenue, and they're working very hard. And that has also ruffles a number of feathers in the community, putting a lot of pressure on this politician. So I think the government have to squeeze out whatever they can, both from the corporate sector as well as from the inefficiency in the government procurement. Right. So this budget, I think, although they wanted to be expansionary, but at the same time, the dilemma is that where to get the funding. So increasing this budget deficit and increasing the debt ceiling is the only way. So they have to increase the debt ceiling from 60 to 65, even though it can be temporary. That the government debt ceiling increase to 65 maybe for 3 years or 5 years before I bring it down. But whether they can bring it down back to 55 or 60% again going forward, I think it's another story, right? So they were probably looking at solving a present problem, that is increase the debt ceiling and let this high debts to the next finance minister. That's my view.
Okay. Now, when we talk about budget, of course, I'm not sure whether Bursa also will request budget from the government or not, but there is an investor who are asking whether can Bursa, so this question is actually for Encik Salim, can BMD put in more concrete measures in order to ensure that the daily active quotes in the OCPO market are more active, because now it's only FCPO is the one that the most active. So Encik Salim, what is your take? Asking more money from government to increase the awareness and publicity?
Bursa being a public listed company, I mean, we have our own budgets internally set aside. On the question on trying to put in more measures to have daily active quotes for the OCPO market, or the options on the crude palm oil, I mean, it is something we can start looking at. Currently, it is being traded. It is traded mainly on blocks, on NLTs or negotiated large trades. So far, we haven't had, requests for it to be available on the screens, but we will look into it. We will engage a couple of market makers and see whether it's viable, and it is something that the exchange will take note of.
Okay, so I think investor is looking forward for that, and hopefully that will make the OCPO market even more active. Now, just now, Kok Heng mentioned about the debt to GDP. So there's a question from a participant that with our current rising debt to GDP ratio, how will it affect our exchange rate? Yvonne, what's your take?
In my session, I actually did mention that the Malaysian ringgit has been actually weakened against US dollar, but not only us, the regional peer has also weakened against US dollar. We just recently, Malaysian ringgit rebounded mainly because of some stability in the political landscape after we have appointed a new prime minister. We started to see some stability and some small strengthening in the Malaysian ringgit. But going forward, as US market continue to do even more strongly with fiscal stimulus and all that, I think there may be some weakness in ASEAN currency, including Malaysian ringgit. So it's not so much a ceiling. I think this increasing the ceiling from 55% to 65% has been government has been talking for some time already, because if they don't do it by end of the year, it will hit 60%. So I agree with Kok Heng that yeah, they will have to do it and increase it to 65%. The issue is whether will Malaysia under a bit of pressure from the rating agency. From Malaysia ringgit point of view, I think that Malaysian ringgit will hover around the current level up to maybe 420, 430. Yeah, there are some weaknesses in the medium term against US dollar.
Okay. Joy, with the let's say, assuming that ringgit is become a little bit more volatile, how will it affect the foreign fund flow into our government bonds and sukuks as well?
Like I mentioned, I think so far this year, regardless of what has happened in Malaysia, the fluctuations that we saw in first quarter, the political instability, and the uncertainties in terms of how we've been managing the COVID situation. Other than I think other than the first quarter itself, from second quarter onwards, the market has been fairly stable. And as I mentioned that even last month, we saw quite a substantial inflows into the Malaysian bond market. So I think as already highlighted, the finance minister has already keep highlighting on the fiscal deficit, debt ceiling may have to be raised. All these are measures that we need to take to pull Malaysia out from where we are right now and into the recovery path. So as long as the government continues to engage with rating agencies, with investors, we hope that there won't be any significant fluctuations like in the bond market. So far, with all the news and everything, everything's still quite fairly stable and resilient from what we can see.
Okay. We talk about currency. There's one question asking, what is the implication looking forward? Will the government ultimately go for the CBDC, the central bank digital currency, and does that have any implication? Kok Heng, you want to say anything?
No, I'm not too familiar with that. Maybe Joy
Okay.
can comment better.
Okay, Joy?
Sorry, what was?
Central bank digital currency. I mean, any implication? Let's say if Malaysia or any other country, I mean, China definitely is moving towards that. But let's say if more countries start going into, or rather start to implement this CBDC, is there any implication whether, in the interest rate regime or even on the current foreign exchange regime that will affect the fixed income?
I guess probably we can look at it as a different kind of asset class to be invested in and may or may not affect other asset classes. But that said, I think our regulators will continue to be careful in how they assess the risk to the financial markets from these new asset classes. I might not be the best person to answer the question on how it might affect financial markets.
Okay. Yvonne, you want to say anything?
I'm not an expert in the cryptocurrency, but the price trend seems to be suggesting that it's a different asset class. with central bank coming into picture, it may not be good for the existing crypto. But then again, it is emerging asset class already, and you find that actually, like for example, Bitcoin has started to underperform the other smaller crypto, and China launching it. After that, I don't think Malaysia wanted to be so early on that front. Let's see what the other central banks are doing. And let's see what China is doing first. China will start implementing it. I think it will have some impact also on some of the cryptocurrency. Especially the big one, not the smaller one. The smaller one continue to rally quite strongly.
Okay. Now, I mean, in terms of all this so-called digital currency or cryptocurrency, to a certain extent, Encik Salim, do you see that affect the investor preference towards the gold derivative? At least for Malaysia, for Bursa product is concerned. I mean, do you see that it has some impact on the gold derivative trading activities?
Okay, I mean, I wouldn't be able to comment on cryptocurrencies, but I feel that holding precious metals such as gold in one's portfolio will be beneficial. I mean, in form of trading gains or investment or hedging against macroeconomic or geopolitical risk, as well as wealth preservation. So it's long been used. I mean, gold has allocation as an investment tool, as well as a safe haven option. And I think gold will always be relevant, should always be in somebody's portfolio. Interest in gold has definitely picked up significantly since the turn of the century. Developments which have affected economies and markets around the world. Most recently, with the COVID-19 pandemic, that has proven that gold remains as one of the biggest beneficiaries in terms of social and political instability. Having said all that, I mean, in terms of Bursa Malaysia derivative, we are working towards launching a Quanto Gold futures contract, which is similar to the one that Thailand Futures Exchange has, which has proven successful over there. It will be quoted in US dollar, but settled in Malaysian ringgit. And this contract will enhance its attractiveness to domestic as well as foreign investors and increase the accessibility for the contract. It will also, give investors or alleviate foreign exchange fluctuations or exposure to currency risk between dollar and ringgit, the US dollar and the ringgit. And as mentioned earlier, we have a T+1 night trading session coming up, having the gold or the gold contracts usually more active during the European and the US opening hours. Having a T+1 session would further enhance this gold contract that we are looking to come up with. And it is expected late this year or early next year.
Okay. Of course, I mean, when we talk about cryptocurrency, I think everyone remember that Elon Musk, for a short while, commented that Tesla is not going to take in Bitcoin anymore because it consumes too much electricity and it's not environmental friendly. And we know that this year, one of the so-called very hot topics among investors and even in the financial market is about ESG. So in the ESG space, Joy, do you foresee that Malaysia will have more and more green bonds being issued, and how much opportunity that investors can leverage on it, or whether do you plan to launch any green bond fund?
Okay. As you've rightly pointed out, demand for these kind of ESG investments, they've been growing very rapidly over the past decade. So yes, there is some green bonds in the local bond market, but in terms of percentage of the size of the total bond market, is still very small. There's still a lot of room to grow. And so as you have pointed out, I think investors are very keen on this ESG or green bonds to invest in these bonds lah. So yes, there's definitely a lot of opportunities in them. I think the performance of these green bonds also has done quite well, but it's hard to find. So supply needs to increase more in order to cater to the actually quite overwhelming demand. So as we see more and more green bonds or ESG theme bonds being issued, then I think that would be better for the overall growth of this ESG in the bond market lah.
Okay, Yvonne, how is your take on ESG? I mean, one of the very common so-called question that investor will ask is how does fund managers balance between, I mean, when in the ESG or whether you call it SDG and whatsoever name that they want to give it, SRI and so on, how does a fund managers balance between the so-called moral value and also economic value?
For Eastspring, we actually take ESG very, very seriously. It's not only our parent company, our regional and all that. We have started to actually incorporate ESG into our normal research process for all our stock selection. Even though it's not an ESG mandate, we already integrate the ESG process into our research process. Okay, so that's how serious it is. So when we do that, you tend to actually give a bit of premium to some of the companies that are doing very well in ESG and hold back on some of the companies that have ESG concern. So that has some impact on also overall market. I think many investors or even GLC is started to look at ESG seriously. So that's why Malaysia, some of the sector that have ESG concern didn't do well. Okay, the CPO price can actually go out a lot, but plantation stock didn't perform. So what is happening? I think a lot of that because of this ESG factor that fund managers started to actually maybe a structural de-rating on certain sector because of ESG. Okay? Utilities is also a challenge. Coal-related is also a challenge. Social and environmental element is also a challenge. Okay. For fixed income, I think Joy has already mentioned. For equity, I think for now we actually see across, because a lot of fund managers are not only looking at it but engaged with the corporates to look at ESG seriously. So a lot of the corporates even have their own ESG team, or they have some personnel that actually draft out what is the plan. Like for the bank now, almost every meeting we talk about ESG, you know. For most of the blue chips, they also talk about ESG. So it's going to be a very big factor going forward. Yeah. I think I missed your question. I talked too much about all this ESG going round and all that. It is a very big topic. In fact, I see that there will be more and more ESG fund or ESG related or responsible investment type of funds coming up in the market, because investors actually request for it. And in fact, when you talk about a new generation, they are really taking all this ESG issue very, very seriously. So there are demand for some of these ESG products.
Okay. Kok Heng, this morning also you mentioned ESG is a different valuation compared to the traditional valuation. So how do you balance between the conventional valuation and also the ESG valuation to decide which company to go into the portfolio?
Well, ESG is a new trend, you know, like this Yvonne said, there are funds looking at ESG. So because of that, the flow of fund will be towards those companies that have better ESG compliance. So this is something we have to accept, that ESG stock will probably trade at some premium over the other type of stock. At the same time, on the fundamental part of it, since other people like the government and banks are also following ESG, so those sector which the bank finance is not so environmental friendly, they will limit their loan, for example. So it will be more difficult for this company to get financing, or probably the rate is higher. So that also affect their funding costs. So this eventually will spill over to other sector that are related to this particular sector, right? So because of that, we have to follow the trend, follow the demand of the market.
Okay. Organizer told me that there is an extra 5 minutes bonus time because they are uploading something big for the lucky draw. But anyway, when we talk about ESG and all this, Encik Salim, does Bursa Derivative have any plan, of course, if it can be disclosed, to position and also let investor have some opportunity into this ESG space?
ESG being the hot topic, it is definitely something that we are constantly looking at to see whether there are products that we can actually bring into the exchange that supports this contract. So as of now, I've got nothing to share yet. However, with the ESG team, with our FCPO, we have implemented, all deliveries of FCPO to be MSPO certified. MSPO being Malaysian Sustainable Palm Oil Certification. This was actually put in place by the Malaysian government back in 2015 to encourage more sustainable practices by the palm players. So as of April this year, all physical deliveries that happen through the exchange for the FCPO must have MSPO certification. And that is one of our initiatives to, go with the ESG initiatives that's around.
Okay. Now, although there is a bonus time of 5 minutes, but it's also almost towards the end. First is we have been talking about a number of scenarios, but if we are going to recap back again, looking into the next 3 months and also into 2022, what are the likely black swan events that can derail our so-called at least is cautiously optimistic scenario? Okay, in the fixed income space, Joy, what are the likely black swan events that may happen and creating some huge volatility in the fixed income space?
Okay, that's a very good question. Black swan events. I guess it's kind of hard to foresee what might happen in the future. But I guess in the fixed income space, unexpected tightening of the monetary accommodativeness by global central banks, yes, that might cause some unexpected fluctuations, right? We talked about tapering earlier, that the Fed and ECB, those central banks will continue to be very gradual in how they taper monetary policy. But what if, for whatever reason, say inflation starts to pick up pace too fast, right, and requires central banks to tighten faster than expected? Then yes, I guess that might cause some of the volatility that you're looking at, talking about lah. Other than that, I guess I hope there never will be another pandemic, another concurrent pandemic from something else. Please don't let that happen. But I mean, these kind of things we can't really tell, right? To be talking about this pandemic, the possibility of something like this, you see in the movies, and last year it happened. There could be more. we never know.
Okay. Yvonne, what is the
For
black
me, the
swan?
black swan is a bit difficult to forecast lah. But for the equity market, they will be like, I can think of is if you have a COVID variant that you tell me the current vaccine is not no efficacy on, that is panicking. That means even the developed country may have to go for a lockdown. I do not know whether that will happen. Hopefully no lah, because we are talking
Yeah,
about
that's why we say black swan.
Right,
Right?
black swan,
Hopefully
yeah.
it won't.
It may not be that bad for fixed income, but it's very bad for equity. If you're talking about a lockdown again, because of all this pandemic become pandemic. Yeah.
Okay. Kok Heng?
I think what Yvonne says is correct, that presently this virus, COVID, has been evolving and it stopped at almost stopped at this Delta. But when more and more people get infected with Delta variants, eventually you turn into something else, and that something else normally is more aggressive. And presently, this vaccine is also not catered towards Delta, although I believe that they're working on it to come out with new variants of this vaccine that can handle Delta. But by the time we are ready to tackle the Delta virus, another form will come out. Then we are always chasing behind this. So I think we still have to be very cautious and follow the SOP to prevent further transmission of this virus. This is one of the major concerns that we have.
Okay. So, I mean, with all this in mind, the last question from the participants is that how should they allocate their portfolio? So, Yvonne, I mean, first, you can answer on within equity space, what are the country allocation or sector allocation? And secondly, if you don't mind, optional, your personal allocation in terms of between asset classes like fixed income and equity.
Yeah. I'm an equity person, so it's difficult for me to allocate money for fixed income. But of course, in a fixed income, if you have some product that decent, but it's very challenging. The yield is, the return is not very, very attractive right now. Yeah. Yeah, that is the thing. But within equity, which is the area that I'm in, my regional team is still very positive on global. So even though we have passed a very strong global growth this year, right? But going into next year, they're still talking about pretty decent growth, So next year may also be an equity year again, and in favor of global developed market over emerging market. Unfortunately, because emerging market have a bit of policy risk, especially on the China side. But with the correction of China, of course, people may see there are opportunities. There are always opportunity as long as you take a longer investment horizon. Yeah. In favor of developed market.
Okay.
By my regional.
Overweight developed.
Overweight. It's not overweight. If within equity, we still have developed market and emerging, right? The preference is actually still with the developed right now. Of course, the upside may not be that much because it's quite rich, right? The valuation, but between the asset class, the growth is still there for the global market. Yeah.
Okay. Joy, in terms of fixed income, I mean, is it going to be high yield bond, Asia high yield, or MGS? How would you allocate?
I guess I have to agree with Yvonne that it's probably going to be more exciting in the equity space. So for fixed income, will continue to be the steady, boring returns. Hopefully not much fluctuations. But like my CIO likes to say, you should never put all your eggs in one basket. And for your investments to be sustainable, you should consider a robust asset allocation to both fixed income as well as equities lah.
Okay. Okay, Kok Heng?
I think the shortage of semiconductor will still be there, at least for one more year. So there are still some last leg opportunity in that space, but had to be selective. As for China, there are good company, but because of these regulatory changes, this morning Ming Han said that this is a fine tuning or this is adjustment, right? Regulatory adjustment for the China. So it provides this opportunity for people to buy some of this good company that's have fallen down, especially in e-commerce, whereby this is a necessity for the people. So I don't think it's the government intention to kill the sector, just that they have to regulate the industry. So I think there will be more opportunity overseas than in Malaysia.
Okay. So in general, I think the view is more on slightly biased toward equity, and then preference on international than local, and for the fixed income, still playing the safe side on stable quality type of fixed income investment. And of course, for those who want to hedge themselves, there's always a Bursa derivative there, whether you want to hedge it as a goal against inflation, or you want to hedge against the volatility of the CI or even interest rate. So with this, time has up, and I will hand this cyberspace back to Kevin. Kevin, the virtual world is yours now.
Yes, let me unmute myself. Hello?
Yeah, we can hear you, Kevin.
You can hear me?
Back to you.
Perfect. Hi. Well, a round of applause for the forum speakers today. That was the forum for today about the road to investment, turning the corner. Thank you so much, Mr. Phua, for moderating it with our panel of distinguished guests. Now, for our participants who are still with us, I'm very happy that you're here, and I hope that you've been happy with us, with me, with today's conference, because it is time for me to ask you to fill up the assessment form after the lucky draw later. It is important for you to fill up this assessment form because it was built by the learning management system in order to claim your accreditation points. Now, in this assessment form, you will have to rate all the speakers today. So for the concurrent speakers in different rooms, like earlier, I think between 2 to 4:30, we had different break rooms. If you did not attend every single session, you went to room 1, and then perhaps the next talk you went to room 2, you don't have to rate every single one. You can just put NA, N as in like not applicable, for those speakers whose talk you did not attend. So I hope that's clear enough for you. You have to submit the assessment form. It was built by the learning management system, so you can get your accreditation points. And I would also love to hear what you feel about the event today. More importantly, before the final lucky draw, we have prepared a video. This video highlights everything that happened today. So while you're counting your lucky stars for the next few minutes for the grand lucky draw, please take a look at this special show reel to see if your favorite parts of today's conference made it into our highlights. Take a look. Good morning, ladies and gentlemen. Welcome to the main stage of Phillip Capital 11th Investment Conference. It is my pleasure to see each and every one of you here today, virtually. I can actually see that there is over 4,000 people who have registered for this event. So, to kickstart today's conference, I would now like to invite Mr. Andy Lim, Group Managing Director of Phillip Capital Malaysia, to give the opening speech.
Fellow investors and traders, I bid you a warm welcome to the Phillip Capital 11th Investment Conference 2021. Some of you may have noticed that over the years, in every Phillip Capital Investment Conference, there is always a binoculars. This binoculars signifies our pledge to curate the content of the conference to provide you a clearer view of the investment landscape. In the last 2 years, the COVID-19 pandemic accelerated this information revolution in terms of the speed of technological adoption in the global economic and social spheres. I applaud you for your presence here today, attending this 8 to 9 hours of full-day virtual conference on a Saturday, as it is evidence of each and every one of you embracing this new normal. Thank you for being part of this wonderful virtual gathering.
Fundamentals, of course, is one of the key factors driving the economy. Investors invest based on fundamentals, right? And normally, a stock that have a high growth in earnings will also trade at a higher valuation. Perception is also very important in reality, and perception is probably more important than the fundamental events. Perception is opinion that in the mind of investor, and that is the one that determines whether investor should buy or sell. Speculation is also a very important thing happening in the market. The market will help it if there's no certain amount of speculation. A buoyant market must have underlying speculation so that it provides liquidity to the market. There's another one I have to touch on is ESG. ESG is a new type of stock that more money is going to be allocated for this. And eventually you find that this stock will trade at a better valuation. So the shift to ESG stock is something that's unavoidable.
You just look at the Malaysia palm oil market on the Bursa Malaysia index itself, is actually broke a record high just early part of this month. So I think the question is very paramount at this critical juncture, whether are we going to see prices to be elevated going forward? If you ask for a price range itself, I probably could see that palm oil prices probably could trade back above the 4,000 mark for a period of time. But if fundamentals starts to go better, I think we should see prices going to hit lower. Next key support area is actually at 3,008, and if it does break that, we should see a downward trend in the CPO prices.
China earlier in the year actually started to crack down. So we have actually seen that China fined Alibaba 2.7 billion, Tencent also was also fined. And I think this is nothing new, because over the course of the history, China has always come up with measures to make sure that there's always check and balances for their society. And I think this actually is a good thing. It makes society more safer, and also overall we know that the government is in control. So this is what I think will actually favor investors going forward, because China is actually making sure that the country is safer for investments going forward.
So I think overall, given our strategy, given what's happening in the global situation in Malaysia, what is our strategy? So I think for global, the growth outlook is still strong, and I think developed markets could grind higher despite high valuations. However, could see a bit of volatility towards the fourth quarter as tapering starts to take place. I think in ASEAN and Malaysia, I think recovery will pick up in the fourth quarter, especially on the reopening of the economy. So where are we? We adopt what we call a barbell investment strategy, where on one side of the barbell, we see that it's the recovery themes, where we like themes like the economic recovery, we like commodity plays, consumption. And on the other hand, we still favor the growth and mega trend companies. I think these are structural trends that will continue to drive growth regardless of the economic environment.
And there we have it, the highlight video for today. Now it's finally time for us to do the lucky draw. It is now 6:01 p.m. Let's take a look at some of the prizes. The first one, Touch and Go e-wallet 3 winners will be selected here, and it's going to be worth 100 ringgit. Will you add some money into your Touch 'n Go e-wallet? Let's play a game of spin the wheel. We'll fire up wheelofnames.com, and all of your names are currently in there. Let's click and spin it. Do we have a winner? Congratulations to Yap Zihoon! You have won yourself 100 ringgit worth of Touch 'n Go e-wallet. Let's try to spin another winner. Fong Pui Heng, congratulations to you too. Now, all of these winners, we will reach out to you because we've got your confirmation, we've got your ID, we've got your numbers already. So don't worry, you don't have to screen cap anything. Shall we draw another winner? And it is Call Hui Zi. Congratulations, Hui Zi. You also won the Touch 'n Go e-wallet. The next prize is even bigger. As I mentioned, we're gonna go bigger and bigger. This is the next spin, and the prize is actually a petrol voucher. And we're looking for 2 winners. Each winner will bring home 300 ringgit each. Let's take a look at who the winner is gonna be. Dun, 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 dun. And the winner is Chu Chen Yi. Congratulations, Chen Yi. We have one more winner for this 300 ringgit prize of petrol vouchers. Let's take a look at who it is. Chang Lim Chern. Congratulations, Chang Lim Chern. You've won yourself 300 ringgit worth of petrol vouchers. The next prize that we have, oh, this is a big one, which means we're only looking for 1 winner. Are you guys feeling lucky? I hope you are, because I would love this. It's a pair of AirPods Pro worth 1,200 ringgit. I hope you saw the photo earlier. Otherwise, we're going to spin a name and look for 1 winner. In 3, 2, 1. Wong Shit Yang! Congratulations, Shit Yang! So happy for you. You've won yourself a new pair of AirPods Pro worth 1,200 ringgit. I was about to say iPod Pro, and that has been discontinued. These are the AirPods Pro. You can use them like what I'm using in my ear now. After this, we have 1 winner as well. This is 2,000 ringgit worth of Philip Master Equity Growth Fund. Whoever wins this, I'm going to tell you, I will be so jealous. This is my most excited prize today. So let's take a look, shall we? In 3, 2, 1. Is it my name? Is my name in there? Oh, Set Ying Pin! Set Ying Pin, congratulations. You won yourself 2,000 ringgit. Set Ying Pin, you are the winner of the 2,000 ringgit prize of the Grandmaster Fund, if I'm not mistaken, the Master Equity Growth Fund. And congratulations to Philip Grandmaster Growth Fund worth 2,000 ringgit. We have a winner. And now, the final prize. A lot of you have waited a whole day for this, and I think they have been, 2,000 names in that list. So let's see who the winner is, because this is the Dyson Air Purifier, the Pure Cool. I just said pure. The Pure Cool Air Purifier TP04. It is worth 2,500 ringgit. Shall we spin the wheel? Ooh. Come on. Joanne Ganway Jan! Congratulations, Joanne! You just won yourself the grand prize, the Dyson Air Purifier worth 2,500 ringgit. That is absolutely amazing. I'm so happy for you. Congratulations to all of our winners. Oh, wow. Thank you guys so much. And I know it is now past 6 p.m. So I'm going to wrap up by giving you a bit of a final speech. But before that, can we give a big round of applause to all the prize winners, all the virtual applause, you guys. Put your hands together. You've made it from 9 a.m. in the morning. You've made it all the way till 6. So we have come to the end of today's session. Please remember to complete your assessment. If you haven't done so, you need it to do to get your accreditation points, and allow us at least 10 working days to submit the relevant regulatory bodies for your accreditation points. Thank you so much for joining us here today. I hope in the last 9 hours you've learned a lot, and you've also gained invaluable insights about investing from our experienced speakers here at Phillip Capital Investment Conference 2021. My name is Kevin Chong, and I really hope that I can see you in person next year. In the meantime, get vaccinated, stay safe, have a great weekend, and happy investing. Bye.